A very good morning, guys. FIIs are short 1,94,000 index futures contracts, 1,99,000 short calls. The market gave them a 1.24% rally yesterday and they covered 4,000. Yes, correct. 4,000. That's 2% of their book. Today is Sensex Expiry. The chain doesn't lie. This is the Tanmay Edge, India's pre-market edge every trading day. I am Tanmay Gurtaguti, Season 2, Episode 34. Let's go. So picture this. On Tuesday afternoon, the FIIs sold 3,622 crore in cash. Tuesday close, they were sitting on the deepest short position of the May month, 1,98,000 index futures short. Cash sold, futures shorted, calls written, puts loaded. They went home short. They went home confident. Then Wednesday opened. Sensex bottomed at 76,773 and around 1 p.m. the news hit. US-Iran peace talks grinding traction. Crude collapsed almost 8%. Rate cut whispers started getting louder. Bank Nifty ripped 2.74%. Sensex closed at almost 78,000 plus 940 points off the lows. The FIIs covered 4,000 contracts. That's not a cover, that's a flinch. And while they were flinching, the world kept rallying. US closed extremely strong. Dow futures was up almost 1.4%. S&P 500 up by 1.46%. Nasdaq almost 2%. So Europe finished green across the board. FTSE was up by 2%. TAC was up by almost 3%. DAX was up by 2.07%. And today morning, Asia is on fire. Nikkei is almost 5.67% in a single session, the strongest Japan day in months. Hang Seng 1.47%, Taiwan 2.18%, Kospi 0.28%, and Shanghai 0.20 bips. Crude, Brent trading at 101.71, basically flat and crashed from yesterday. Gold at 47.01 neutral. Dollar index below that $98 mark. Rupee strengthened 70 bips to close at 94.61. And India's 10-year yield down 6 to 6.94%. That's a rate cut signal hard coded. And then Gift Nifty is trading around 24,500. That's 170 points versus Nifty's close of 24,331 that yesterday we saw. Sensex implied open should be around roughly around 78,400 to 500 range. That's right at the cap, not above the pin at the wall. And the setup we walk into is extremely important. But before that, the FII trap in full. Let me give you FII book that was present last night. Index futures net short 1,94,000. They were 1,98,000 on Tuesday. So that's the headline. The options book is louder. Short calls 1,99,000. They covered 88,000 in one session. Long puts 3,56,000. They trimmed around 25,000 contracts on that note. Net FNO basis still marginally bearish, unwinding 7.5 lakh contracts which are short, which are still present on the index. Now look at who's on the other side. Clients long 1,30,000 futures. Retail is positioned long. Pros long 29,000 futures. FI is the only net short in the room. 3 out of 4 players bullish, 1 player bearish, and today is expiry. So the math has only one outcome. Cash flow for Tuesday, if you look at, then 3622 crore was sold on Tuesday. DIs bought 2600 crore. The pattern for this month has been FIIs going out once again, DIs absorbing. So DIs have a net buying of almost 73,000 crore and FIIs are net seller of almost 780 crores. So structurally, now DIs hold 21% of Nifty 500 as of March 2026, record high. So FIIs are at multi-year lows of almost 17%. Okay, so March alone, $14.2 billion have been pulled out, and DIs have pulled in $28 billion. All of it is sticky SIP money. It's not their market anymore. They are trading inside someone else's tape against someone else flow. So what has gone wrong and how they are positioned? The trap is set, the squeeze hasn't started. And what did the chain do while the FIIs were flinching? It voted hard. 78,000 has almost 2.4 million combined open interest stacked at one strike. That's bigger than the next 2 strikes combined. Put writers have added almost 1.14 million contracts on 78,000 strike. That's not hedging, that's conviction. Call writers have covered almost 2 lakh contracts at the same level. Both sides agree, settle here. Below that, 77,500 put OI, which is present as the floor, where put writers have added 1.25 million in a one day. Okay, so flows don't get more conviction backed than that. So 75 The 77,500 stays as the floor. Above 78,500, 1.2 million call OI. Call writers added around 3 lakh contracts over here, the cap. That's where we are opening. So forget the box framing for a second. We are not opening at the pin. We are opening at the wall. Now about the implied range. The 78,000 straddle trades at 665. Call at 420, put at 245. That's the market's pricing for tomorrow's expected move. So the implied range becomes around 78,700 on the upside, and on the bottom side 77,300. Implied IV of around 17 is where we are going to open. 78,500 already is on the cap, and the chain is expected to move beyond that to almost 79,000. It's just 335 points above the upper break even. So here's where it gets sharp. The gamma flip level, it's trading at 78,100. We are opening 400 to 300 points above the flip. So dealers are going to go long gamma. They are going to sell into rallies, buy the dips, dampen the moves out, but only if 78,500 holds as resistance. If the price breaks above 78,500 and we see a unwinding happening on the call side, then 79,000 cannot be ruled out for today's expiry. If that wall breaks in the first hour, keep a watch on that as well. So aggregate stats on the chain shows that PCR is standing at 1.26, extremely bullish. Okay, the chain shifted bullish in one session. The FIIs are short. The straddle is pricing around 78,700 on the upside. But the trap isn't theoretical, the trap is the trade. But what's actually leading? Now let's zoom out from expiry and what actually leaded yesterday. Let's see. It wasn't IT, it wasn't Reliance. The biggest weight in the index was dragging. It wasn't FMCG as well. That was the only red sector yesterday, negative 20.26%. It was cyclicals. PSU Bank 2.84% positive, Realty 2.63% positive, Auto 2.41 positive, Pharma 2.3, and Bank Nifty 2.74. Every sector that benefits from cheaper energy and a softer Rupee outlook, it is up. The crude collapse wasn't macro headline, it was a sector rotation in real time. Banks rallying on rate cut whispers, Realty rallying on lower yields, autos rallying on cheaper input cost, and the bond market as well as it agreed. So silver on MCX also spiked 3.88%. Gold was flat at 1,52,219. Silver is leading in the metals, and keep a watch on that. But here's that matters most for you, the broader market. Nifty Midcap 100 is up by 1.76% yesterday. Small cap 1.81. Both nearly 2% up. Midcap, small cap, IT, telecom 3%. Mid small cap, healthcare 2.5%. The broader market is where the second leg lives. So Sensex today is going to be a tug of war between the pin and the cap, with 79,000 in the conversation. Nifty is going to follow Sensex, but the real money is the money that compounds, is not moving outside the index free. Quick one on the pin risk before I tell you the trade. When a strike has more open interest than the next three combined, like 78,000 today, which has almost 2.5 million contracts, the chain becomes a magnet. Gravity pulls price to the strike. That's the math. But gravity breaks when another strike has heavy call right above it, and that strike gets tested at open. So 78,500 will get tested, that gravity breaker. If it holds, pin behavior wins. If it breaks, call writer covering forces a squeeze out today. So today's path, we open at 78,500 at the wall. Two scenarios. Scenario 1, price holds about 78,500 for the first hour. Call writers cover, squeeze accelerates to 79,000 in the play. Scenario 2, price gets rejected around 78,500 to 600 and fade back slowly towards that 78,000 mark. The chain pins, wall crushes. Here's my read for today. Buy on dips still continues, and we are doing it. FIs are trapped short. The chain is bullish pinned. Yields are falling. Crude has collapsed. Cyclicals are leading. Every dip into 78,000 zone is a structurally buy. If 78,500 holds and we squeeze above that 78,700 one standard deviation range, 79,000 cannot be ruled out. That's the upside trade. Keep an eye on the broader market, mid cap and small cap, nearly 2% up. So on Rupee case, Nifty 10 model, which got rebalanced on last Monday, is up by 0.89%. But the lifetime alpha still stands a standout at 4.67%. So the portfolio is live on rupeecase.com. Track every position, every rebalance, every alpha number in real time over there. So that was the edge for today, guys. If this added any value, share it with one trader friend who needs it right now. Subscribe and give a rating on Apple Podcast or Spotify. And it is streaming live first on rupeecase.com, India's systematic investing terminal. Link is present in the show notes. You just got earlier, guys. See you all tomorrow once again. Happy expiry trading.